Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Saturday, December 10th, 10:53 a.m. New York time. I'm going to show you the broad market using weekly candles because we just finished another week. We're getting closer to the end of the year. Also identify the highs and lows of the year and if we're in acceleration or trending. If you're new to investing, trading, the financial markets, you could do dollar cost average using stock ETFs. Yep. And many companies offer stock ETFs on a similar product. That being said, some of those companies are bad. Some are better. Do your due diligence. If you're going to buy a stock ETF that's mirroring a financial instrument and there's different institutions that manage it, not all management's the same. So I'll give you an example. You have the commodity category of energy. In that category, you have crude oil. There's different companies that list stocks that buy future contracts and trade them as stock ETFs. The one I prefer, my go-to one, if I'm going to trade the stock ETF, would be USO, Uniform Sierra Oscar. But there are other companies, again, that have stock ETFs. So you as an adult, do your due diligence. Let's get on. First, look at the equity indexes. Looking here at a 1-year duration. Again, each candle's a week. Look at the biggest, most popular, well, not the biggest, but the most popular go-to stock index in the United States, the S&P 500. Give it a big hand. Symbol SPX. For the week, it closed red, made a lower, low, lower high. Zoom in. Look at here. It's an acceleration phase. The overall trend here is still up. Overall trend meaning the current trend is up, but in acceleration phase. The NASDAQ 100, also in acceleration phase. The Dow Jones Industrial Average is also in acceleration phase. Yes, they're red. They made lower highs, lower lows. But again, it's an acceleration phase. And the Dow Transports, well, broke below this acceleration phase and closed below it. So now it's doing a deeper retracement. And the Dow Utility inside candle for the week. Yeah. It's trying to be a contrarian instigator, different than everybody else. Be concerning too, because it looks like a doji. And those two little bodies on top of this trend, again, that's a trend. Two little tiny bodies, big wicks, top and bottoms. Yeah. Meanwhile, it's in a consolidation, but it might be distribution. Smart money may be selling. So insights. Utilities are stocks that typically pay high dividends. People gravitate to stocks that pay high dividends when they think growth is going to slow down. So again, if people think slow growth is going to slow down, they may not want to be holding or investing in technology stocks anymore. They may go dividend stocks. Well, if they think interest rates going to go higher and they get better return on interest rates somewhere else, why would they want a stock that pays a dividend? Or if they think the stock market is going to continue growth, then why would they want to be in defensive stocks that pay dividends? So maybe smart money doing distribution here. Maybe the economy is doing better, then some talking heads want to mislead you. Again, are we better than we were 2 years ago? Looking at the Russell 2000, again, broke below, big sell-off, broke below the consolidation. Yeah, Russell 2000 is a bunch of small companies versus big companies on the S&P 500. So let's zoom in here. Look what's going on. Across the board, almost everything's red for the current week, other than the Dow Utilities, hollow body. And we saw the big sell-off occur. What? The Russell 2000 broke below consolidation. The Dow Transports broke below consolidation. But the other one's still in consolidations. Let's go on to next. Let's go on to U.S. Treasuries. Again, U.S. Treasuries are fixed income. U.S. Treasuries move in relation to the yield being the interest rate. We'll look at here at the higher duration. Again, these are U.S. Treasuries, and they trade inverse from the yields. So yields, aka interest rates go higher. These financial instruments go lower. So if these are trending up, that means interest rates, yields are going down. Well, yields will be going down, and one would expect the interest rates go down. So again, as these are going up, yields go lower, and one would expect interest rates go lower. So looking here on a 30-year U.S. Treasury bond, red for the week. Again, the trend is up. Made a higher high, higher low, made it dodgy, very suspicious, made that on top of this trend. So one would expect it might be pulling back a little bit. Let's run a fib on that, a notch on that. And if you're bullish, meaning bullish, that you think interest rates are not going to go much higher, going to start maybe even going lower, then you would consider buying this, look for the retracement, and buy it, reload it on the bullish side. Looking here, the 10-year U.S. Treasury. Yep, same thing, higher highs, higher lows, top of a trend. And a 5-year U.S. Treasury note, very similar. And the 2-year, very similar. Oh, I made an inside candle, but still momentum. So look at these, and you notice they're coming off the year lows. They're coming off the year lows. So now you might consider these might become the winners into next year, meaning they might continue going higher without taking out the lows. So you might consider dollar cost averaging in the stock ETF, TLT. Let's go to the next. Let's look at the big currency, the US dollar. And we're going to include Bitcoin, old school cryptocurrency. US dollar index, looking here over 1 year, each candle being weak. Look at US dollar, it's pulling back, trending down. Here's the low. This first yellow horizontal line is the low of this year. And here's the high for this year. Excuse me. I apologize. So green, made it green, but still lower high, lower low. So good. If you think the dollar is going to continue going lower, you could be trading bearish the US dollar with a bearish stock ETF. I shared that many times. I would recommend you look into doing that. Dollar cost averaging. You might want to contribute every week, every month, because right now the US dollar is trending down. Why would you not want to make money when it's going down? You could do that with the stock ETF I shared in the past. Cryptocurrency Bitcoin. Look at that. Here's the low for the year. Garbage. Yeah, a lot of garbage. Let's go on to the next. Let's look at those broad market currencies that are in the US dollar. They're pegs against the US dollar. So we're looking at the currency markets happen to be in the futures market. First one to look at is the euro. Again, this is trending up, trades inverse of the US dollar. US dollar is trending down. This is trending up. The euro trending up. Again, there's stock ETFs of this. Look at that. Dodgy inside this trend, top of this trend. Very suspicious. You might have a pullback. Good. If you're bullish the euro, then let the pullback occur and buy at the lower price. Reload. Or again, you could just trade bearish US dollar. Japanese yen, inside candle for the month. Very interesting. Yeah, there's the low for the year. It's doing consolidation, breakout, consolidation, staircase pattern, higher high. The yen is gaining strength. What are you waiting for if you haven't bought it already? Again, it has a stock ETF. You could buy one share. And if you want to do due diligence, well, again, you could look between these other currencies, see which one you like the best against the US dollar, or buy a diversify, make your own index. British pound, higher high, higher low, but still closed red for the week. Look at that. The trend is up too. And the Canadian dollar, oof, is getting smacked down. It is weaker. US dollar is beating it up. Yeah. Lower low, lower high. So again, policy, Canadian policy and the United States policy is favoring the US dollar against the Canadian dollar. Big difference what those other ones I was showing you, the euro, the yen, the pound. Yeah. Canadian dollar is weak against the US dollar. Again, policies they are doing, not the United States, the policies the Canadians are doing. Well, some of our policy too, but Swiss franc, higher high, higher low. It's an acceleration phase. There's the low for the year. Not so much trending. And the Australian dollar, again, inside candle for the week, acceleration. There's the low for the year. So who's been trending up best against the US dollar? Well, we got the euro, the yen, and the pound. They're better leadership. So again, dollar cost average. They each have stock ETFs. You can be buying one share of each. Let's roll over to another financial instruments, the commodities. Many categories in the commodities. So we'll first look at the category of energy. Looking here at the US dollar, looking again in 1 year time frame. This whole chart covers 1 year. Each candle is 1 week. And look what the crude oil, new low for the year. Again, crude oil made a new low for the year. So has your main go-to media source notified you that crude oil made a new low for the year? I'm not aware of any media source notifying the public that crude oil made a new low for the year. Again, I read publications. I'm aware of the situation because I include looking at the charts here, the real price action. So who owns that media station or those media stations? And what's their end game to not share this information with you? Politics. So again, you are more aware than the most people because again, crude oil futures hit the new low for the year. Natural gas. Here's the low for the year, all the way down here. To make a lower low, lower high, broke below this consolidation. And look at that big wick on the bottom, buyers stepping up. Again, if you understand commodities, the category of energy, and understand difference between crude oil and natural gas, they're both fossil fuels, they're both dirty. But again, the better one being natural gas. Unfortunately, the United States is not deeply invested in natural gas because, again, people constantly elect knuckleheads that to make the bad policies. So again, but natural gas is a good investment, stock ETF, UNG. If people were more the wise in the United States, they'd be lobbying their lawmakers to require more infrastructure to use natural gas and big hauling trucks to use natural gas. Yeah, we have plenty of it in the United States. Crude oil, there's different kind of crude oils, different quality of crude oils. And in crude oil, there's different, forgot the word, within crude oil. Not talking about the light or sweet, but there's different, there's a different quality. Anyway, the United States does not have the good quality of crude oil that we need for most of our infrastructure. That's why we import crude oil. Wow, I forgot the word. So I think it's sulfate or something like that. Yeah. Okay, let's go on to the next commodity. Metals. Category metals. Gold. Here's the high for the year. Here's the low for the year for gold. The trend is up. Red for the week. Higher high, higher low. Bullish. Still performing well. Huge wick on the bottom. Nice bunch of buyers stepped in. Silver. Look at that. Even stronger. New high. Higher high, higher low than last week. Buyers are in that. Okay, here's the low for the year. And platinum. Inside candle for the week. It's in this consolidation. It's consolidating, not trending. And copper. Here's the low for the year. Small candle, dodgy, in its consolidation, is not trending. Copper, big use for industrial use. Gold, not the same. Gold, what? More for the use of bling bling for your Instagram picture. Big difference, the uses of these metals. Understand that. Yeah. Let's go on to the next category. Agricultural. A lot has been happening here recently too. Right off the bat, we're looking at corn futures. Trend is down, lower low, lower high. Here's the low for the year. Again, small trading range. Corn, multiple use. Yep, consumption by humans, feed for animals, and also used for ethanol. Wheat futures, new low for the year. Look at that. Here's the high for the year. Here's the low for the year. I ask you, has your media source shared that to you? New low for the year? I wonder why not. Again, charts don't lie. I highly recommend you get data feed from a futures broker, and at least once a month, even better once a week, but at least once a month, look at these futures I'm showing you so you know what the situation awareness is. Because the media and even the business media shows choose not to cover the broad market as well as I'm showing you. That's the problem with your producers and also the investors that own those companies. Soybean futures, there's the low for the year. So green, higher high, high low, broke above this consolidation. And live cattle, new high for the year. Again, has your media mentioned that to you? Yeah. So all the way back here, these blue lines, trend lines, we're building a wedge, and that wedge is getting tighter and tighter and tighter. If you've been following me for some time, I shared with you this trade idea, bullish. And if you took that and still in it, outstanding, good job out of you. If you took that trade, closed it for profits already, good job out of you. Understand, live cattle, beef. Now we're looking at feeder cattle. Again, two different uses. That's why it says feeder cattle. Here's the high for the year. We're coming back up to that. So that's a swing point. We're coming back up to it. But again, green for the week, higher high, higher low, broke above this consolidation and out of that trend. Yeah. So why is cattle getting more expensive? Who's sharing that information with you? Do your due diligence. And lean hog, there's a low for the year. Inside candle for the week. Again, this was a consolidation. A lot of whipsawing, got tighter and tighter. Staircase pattern, lower low. Small trading ranges. Why is that? Think about it. So if you like this content I'm sharing with you, I appreciate if you make a donation or subscribe or click like. Many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.